Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, August 30th through Friday, September 3rd, 2010. Well, we are coming to the end of August, folks. Let's get into the charts. I wanted to start with the daily chart here briefly to go over a couple key things. First off, I'd like to start with the daily chart towards the end of the month because it's fun to look back and see exactly where this market went at the beginning of the month to the end of the month. And you can clearly see that, again, off of our key master turn date right here. And by the way, the master turn date we called for a move down in this market was right here on August 10th. The market has collapsed much, much lower. I mean, look at this move. Down, up slightly, and down sharply again, and now towards the end of the month, up slightly just in the last couple days. We've had a little bit of a bounce in this market. So net, August has been a down month after you can see the previous month was really an up month. I mean, we go back to July. July had a nice bounce in it after the previous June was an ugly month. But net overall, August has been down and down pretty sharply. You can see at the beginning of the month we were hovering right up here around the, 113 level or so, the 113.25 master level. And again, this was a master level we had isolated. Then we had our turn date right here, and the market did collapse down. And again, the turn dates are given out days, weeks, even more so before they occur. So you can be ready, you can position yourself. That's all in the Research Center and in the intraday stock chat at inthemoneystocks.com. Now, again, as we fell down here, one thing I think that is very important is to note this blue slanted trend line. Now, this blue slanted trend line may not look like much. As you can just see right here, it's connected to this low, and it connects right to these lows. But it actually is a master level of master levels. We talk about these big levels, and we say, all right, well, this one's big, this one's big. This one is huge, folks. This blue line here sloping up is huge. Now, why? Well, I'm going to zoom out, and I'm going to show you something amazing. Take a look at that. That's what's so amazing. This low pivot that we are sitting on, that we have bounced off of the last couple days, literally connects to the March 2009 lows in this market. All right, now what does that mean? Well, that means that as long as this holds and stays above, you probably right off of here will have a neutral to slight upside bias for the next week period. But after that, all bets are off. All right, you're probably going to get a little bit of sideways move, a little bit of a bounce move here over the next couple days. And then that a very, very good possibility in September, whether it's the second week in September or the third week in September, there very well could be a major break to the downside, all right? Now, again, it's a huge breakdown because it connects all the way here. You break this line, literally, I think you're going back to 101 on the SPY easy within days, if not 90 to 95 on the SPY to the way down. So just keep that in mind, folks. It's a huge level. And right now, again, you can see we hit it beautifully and bounced off. Now, remember, after you hit a master level like that, you're not going to break right away, especially because you have light volume in this market. Light volume in this market is going to continue to play out. And again, we're going into a week of very, very light volume expected ahead of the jobs number on Friday. The unemployment rate and the non-farm payrolls number is coming up on Friday of this coming week. That's going to keep volume very light. Plus, you have the holiday, Labor Day holiday weekend coming up, which is also going to keep traders away or on vacation. So light volume generally dictates that neutral to side, upside bias. That's what I'm going to have for next week going into it, all right? Now, I don't think it's going to be a big up week, by the way. No, not at all. A large majority of the gains already were on Friday this past week, $1.63 on the SPY, over 100 points on the Dow. But I think it's important to recognize that chances are, until we get to Friday, there's probably not a huge sell-off that I can see or foresee in the future in this market. Again, neutral to upside. You'll have a couple down days in there maybe, but mostly neutral to upside in my opinion. All right, now going back to last week, let's dissect what happened. Last week, overall, the week ended slightly lower, just slightly lower. We actually were much lower, but as you can see, this is last Friday right here, where we closed at 107.50 approximately on the SPY. This week, we ended at 106.85. So really, it was only about a 50, 60 cent drop, 70 cent drop for the markets over the course of that week. Net, when you take exactly from where we closed to where we opened or closed on this Friday, I should say. And what I can do here just to show you, that's from where you closed the previous Friday to where you closed this Friday. It's only a slightly slanted line. It's not too dramatic to the downside. All right, now the key levels continue to work on the intraday chart. I'm going to zoom in and here just show you guys this. Take a look at the exact low of the week. It was a beautiful double bottom, beautiful buying opportunity on Friday. We talked about it in the intraday stock chat. My members in the research center knew it all about it, and they should always know that these trend lines are going to work out to be key levels. In addition, going into Friday after we had an ugly sell-off on Thursday where GDP, everyone was freaking out about GDP on Thursday. Oh, it's going to come in less than 1.4% estimates. It's going to be underneath 1%. I looked at everyone and I talked to my traders and I said, guys, this is just, fear-mongering. This is just panic setting in. Chances are it's going to come in better than expected now because expectations have been lowered, and you'll see a reversal and a rally on Friday. Sure enough, that's exactly what happened, even after Intel warned on the coming quarter. And that's how amazing these levels are. Please note, look at the low put in on, this is Wednesday's low, and look at Friday's low. Pivot to the exact penny. Exact penny, folks. That's your reversal. That's your mega move up. And what an up move we had on Friday. We had positioned ourselves long, guys, and it was another very profitable week. One of the trades that I took profits on already this week was the USO. Made great money on the USO with my traders, and also in the research center, folks. Those trades are always given out live, and they're swing trades. We're not talking about day trades here. Swing trades given live in the hot charts and alerts, which is part of the research center. You get everything listed under the research center for the $49.99 a month. All right. So again, reversal, mega money made again, and again we had other plays. One of the other plays that I'm currently in as well, and I'm still in it, is the XLF. I'm up in the money very nicely on that already. My entry on the XLF, which was given live in the research center, was right here. $13.32. Look at that. How did I know? Simple. Bottom line is, you just have to read the technicals. You have to understand the levels. If you go to your daily chart of the XLF, look at your double bottom. Just bought the double bottom. Didn't take a genius to do, frankly. Now, granted, there's some caveats that you have to be aware of about double bottoms and certain key things, but nonetheless, that was one of them. That was a beautiful one right there, and now in the money nicely. Break-even stop can't be a losing trade. If it goes up a little bit more, even going to put in a in-the-money stop, make sure I take more profits on that. Another trade that I've been in for quite a while, or about a week or so with my members, is Cocoa, Corinthian Colleges, from an alert of $4.45. It is at $4.80, already up basically 10% on this trade, and I do look for a pop over 5 Monday or Tuesday of this coming week, and I'll take profits probably around 5.25, 5.15, somewhere in that range. Just again, continuing to throw out the swing trades, folks, and that's what it's all about. I just want to continue to build up the money. I'm not looking for the home run where I'm going to make $1 million in a trade. As I said to my traders and the Research Center members this week, I don't care if you're putting $1 in your pocket or $1 million in your pocket on every trade, as long as you're consistently making profits. The rest will take care of itself. All right, if you do 1 million trades and you're making $1 on each one, you're still making $1 million. Now, granted, obviously you hope to make a little bit more than $1 a trade, but the point is, it's consistency. You have to win 8 or 9 out of every 10 trades, as we do, and the rest will take care of itself. You'll look back at the end of the month and say, damn, look at that. What a profitable month. You look back at the end of the year saying, wow, 2010, what a profitable year, because of consistency, reliability, discipline. These are the things we drive home. This is the military of trading and investing. We're going to drill these principles into you in our research center and in our chat room, and that's the way it has to be done, because there's too many wimps out there that don't know when to cut their loss. They don't know what to do in trades. They don't know the key levels to buy. They're just guessing, and that's where you're going to get yourself in trouble. That's where the institutions are out there like sharks in blood-filled water. They are going to attack you. They're going to grab your money and run, and you're not going to have a chance, and I swear to that. I'll tell you right now, folks, these black box trading programs, they are good. You have to know what you're doing. You have to know these keys that we teach in the research center to have a fighting chance, or you're done for. I've seen way too many traders pass through along the way trying their own thing. They end up getting crushed, losing all their money, and then they're done. Make money consistently. That's the way to do it. Join the research center. All right, folks. So again, this coming week, let's flip back to the SPY. Here's your 10-minute SPY. You can see a nice little upturn. Again, my general prognosis, assuming, and this is key, assuming that you don't have any crazy thing happen in Europe or the U.S. or in Asia or the Middle East, let's assume that it's a relatively quiet week. The market should float neutral to slightly higher, I would think. Overall, I'll have that neutral bias on the markets. Next Friday is going to be the big one. Friday, the jobs report at 8:30 a.m. We'll do a no-hype live broadcast so you can view my charts. If you're a Research Center member on this Friday, you will be able to view my live charts as that data comes in. I'll give play-by-play of that. We'll discuss what it means for the market and everything else. Have a great, great rest of the weekend. Again, be ready to profit this week. We'll be profiting in the Research Center and in the Intraday Stock Chat. See you then. Take care.